Hello traders, I'm excited to bring you guys another video on Bookmap. Now what we're looking at today is not just a general overview of the platform that I did last week, but a look at a specific element of this platform that you can use to better predict the markets in a pretty simple way. Now I also have a guide out called Master of the Books that teaches order flow, order depth, and order book trading, and if you're interested in that, you can click the link in the description below to pick that up. So what I'm going to do today is first going to show a few screenshots that I made. I was tracking Bookmap for a long amount of time, and I found 3 screenshots that I took that really illustrated what I wanted to show today really well. And then we're going to look at the live Bookmap platform and apply the strategy in real time and look to see how we would use this with a direct trading approach as well. Now, the topic in today's video is thin liquidity or empty space. Remember that orange or red means that it is an order book level of very strong order depth. So a lot of bid volume or a lot of offer volume. This is a large offer, meaning a large limit sell. This is a large offer, large limit sell. This is a large bid, a large limit buy. This is a large bid. Now you can tell if it's a bid or an offer by looking at current price. So current price was here. And then looking at to see is that limit order above or below price. A below price would be a bid. Above price would be an offer, also known as an ask. Now what we want to look at is not the period of very strong offering or very strong bidding, but the period where we just see empty space. This dark space means that there's really no one trying to limit sell here. Now when there aren't that many people trying to limit sell in an area, right here you have a supply-demand imbalance because right near price we have a good amount of demand. But look at this, we have no supply. We have not many people trying to sell, but we have a lot of people trying to buy. Demand is higher than supply, price rises. So it's these periods of empty space that can just quickly get price to go up or quickly get price to go down. Price can also fall or rise through heavy liquidity, meaning, even when there's this much order depth, price can cut right through it. But what we want to look at is where does price have the most ease of access with these levels of thin liquidity. So look out for these dark levels, and we're going to see how they influence the market. Price was moving down. Price had offers here, price had offers here, price is moving down. But then right at this point in time, this offer was canceled, this offer was canceled, there's nothing here. There's just no limit sell orders here, and there are a lot of limit buys. Price rises very quickly. Within a few, 10 seconds, price just cuts right through it. Price comes to here. This little impasse here, but we see, what did the bids do? They carried up with price. This bid stayed, very large bid. This bid diminished a bit, but he was still active. And then this was the best bid, and it became very strong here and here. And price went up because there's just not really much blocking price. So price went up, but then we got to a point in time where the offers finally took back control. The sellers definitely took back control here. We see a lot of limit sells coming in here, really not much bidding here, not near price. So price cuts right through. Now the second picture is something that is probably my favorite example within any example that I've seen so far of looking at these levels of thin liquidity and trading off of them. I see a lot of order book activity down here. Really, a lot of bids, a lot of offers all over the place. Then something really interesting happens here. When this uptrend begins and when this uptrend is carrying, do you notice a pattern here? I'm going to show you guys what it is, but just try to see if you see a pattern that happened with these order book levels as price rose. Every single offer near price was canceled as price was rising. Price was rising, offers canceled. Price was rising, offers canceled. Price was rising up to here, and there were offers here. They just fell apart and they just got canceled, diminished. Price is here, price gets a little bit higher. Then this large offer right here in yellow gets canceled. And then there's just nothing blocking price from rising. Price rises, we get a large bid placed right here, large limit buy order, and then we see just such thin liquidity here. Really nothing stopping price from going higher. And there's a lot stopping price from going lower because there's a large bid here and a large bid here. And this large bid was active even when price was here. So price goes up and then this offer was canceled, and then we just see after that offer was canceled, just complete empty space. Price just cuts right through that empty space. Now going back to the topic of the previous video, remember today's topic is going to be looking on these levels of thin liquidity and watching as price cuts through the levels of thin liquidity But we also want to look at placement and pulls of large limit orders. I see a large bid placed, and it's pulled right at the market top. Because when this bid is pulled, you can see a complete lack of order depth, of bidding depth below price, and price just goes right down. Why? Well, we have a supply-demand imbalance. We have more supply up here, and we have less demand down here. Now, I'm looking at limit orders only right now. Let's go look at the market orders as well. We see strong market buying and really not many market sells. This is not a time where we want to sell. It's just clear market buying, clear market buying, clear market buying. A lot of market buying, and then we get a large enough market sell. And then we get a large enough market sell here, and right about here is what instigates this downtrend, I'd say, right there. No bidding depth below, large market sell, price goes lower. So pay attention to when price goes up or when price goes down. What do the bids or offers that are near price do? Because that's going to reveal where price is going to go in the future. Final example here, a quick one. Price is falling, price is falling, price is falling. Then we see a lot of bids around here. And then right at this point in time, something happens. We see large bid placed, and then we just see not much order depth to the upside around here. Because this offer was canceled. This was canceled, 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 canceled. So price just goes right up, right when these are canceled. Price just rips right through it. We see actually a good amount of market buying and market selling, which actually shows a weakness of this uptrend. You see two large market sells here, which is a sign that this uptrend may not last that long because there are interested sellers. But what we end up seeing right before this price rise is something that I've shown many times before. Large offer is canceled, and after it is canceled, at this point in time right here, we see no offers. Just nothing, just blank space. Price cuts right through it. After price cuts right through it, we see right below price, I just don't see any bids. So as price went higher, there were no traders who were willing to buy higher. No one wanted to, so price fell. Price fell right through it. And then when price was here, a trader put a bid here. And they tried to press the market higher, but once they saw that the market was going a bit lower, they canceled their bid. And price went right through. So we had empty space, large bid, but the large bid was canceled and cut through the empty space. Now let's look at Bookmap. Now already I can see a pattern of some thin liquidity / empty space right here. Price rose right here, guys, and this is all live, by the way. Price rose right here, and you can see it rose. We see strong market buying, strong market buying, strong market buying. Then we see small market buying, and we begin to see market sells. But at this point in time, I see just no bidding depth, and that should be a warning sign to you that price is going to fall. We see no bids here. They're all canceled. There isn't much market buying. This is very likely to push the market lower. Not only that, we see a large offer here, lots of offers, and those push price lower. Then eventually we see, right when price makes just about a bottom, we see a large bid placed, and that pushes the price up higher. But then what ends up happening is this bid either got canceled or some of the liquidity actually got eaten into. Now to go find out whether that bid was canceled or not, I'm going to hit the 3 minute, and we can go see what was going on here. So we have the large bid here, and it looks like it stayed. Yeah, this bid stayed, but price is going to fall right through this bid anyway, which it did. Now, you can see that all this empty space was continued to be cut through, and then here we just see complete empty space with a large, bid here, but between here and here, there's nothing, so price falls. So what you have to keep paying attention to is these areas of empty space. As price is trending up or price is trending down, always ask yourself, will price have easier ease of movement to the upside, or will price have an easier ease of movement to the downside? Because if you can answer that, then you can find which way it's easier for price to go, which means that if price begins to go in that direction, it could just cut right through those levels of thin liquidity. Perfect example. What is happening right now, guys? Complete empty space down here, lots of offers here, no bids here. Price falls, and prices just continue to fall. A lot of offers being placed here. Large offer, large offer, large offer. A lot of limit sell orders, and this is just going to keep pressing price down until the bids begin to get stronger and the offers begin to get canceled like that. Those two offers just got canceled. So I'm going to expect price to go up a bit. Two offers canceled here, as you can see. And we can see that this offer was diminished a bit. It went from this color to this color. And it looks like maybe we see those offers fight back, or maybe we see the bids fight back. Let me zoom in on this just to show you guys. Yeah, perfect. You can just see, beautiful example right here is really what I want to mostly highlight, is that we see a lot of offers here and just no bids. And that's a sign that the price is going to go down. Here's the tough part. You may say, how do I make money off this? That's everyone's question. And if you can answer that, well then, the world is yours. But what I can say is that if you can predict in the short term where price is going to go, you can use a bullish or bearish analysis to try to get your orders filled in that empty space. If you're very, very bullish, you can look for the edge of this empty space, so around here, and try to get your bid filled. Another example of that. If you see empty space around here, you can look to try to get your bid filled in between this empty space, this thin liquidity, and a large bid, if you were bullish, and price goes down because the offers went back. You can see that when the offers were canceled, price does actually go up, but then what ends up happening is the offers come back, which push price down beautifully, as you can see here. Now there's a lot of empty space to the upside. Do you see that? And price rises. Look at that. Okay, we need to focus on this. Beautiful. Price fell, and then there was all this empty space, thin liquidity, and just when I said that, price rose. Because there's just no one willing to sell at these prices because price already sold through them. Now price is rising. That's what happens when you see a high volatility move. You see a high volatility move one way, and then price goes in the other direction because there aren't that many order book levels that are preventing price from going right back in the other direction, but there are still order book levels preventing price from going lower. And now price is just rising here. Now we do have some space here, meaning that there aren't that many interested buyers around here. There also aren't that many interested sellers here, meaning that price does have the opportunity to go up or down in this example, and price goes down because the market sellers are taking back control. Now we can see that the bidders are beginning to put their foot in the ground, and price is going to rise a bit, like I just said. Now we see a large offer, but do you guys still see some more empty space to the downside here? I'm seeing a lot of empty space down here. Uh-oh. Is price going to fill that space? Is price going to fill this space? Because it looks like it's going to. Unless I see just an influx of bids, I'm thinking price is going to fill it. And price does. Price falls right through that empty space that was generated. And price is going to keep falling through that empty space. Like, come on, do it on cue. That. Price continues to fall. We can even zoom in really a lot to see this. Empty space, thin liquidity, empty space. Yeah, price cuts right through. Empty space right here that we just saw on camera. Price cuts right through it. Look for those levels of thin liquidity. Look for those levels of empty space, because that can tell you where price is likely to go in the next few seconds even. And if you can predict where price is going in the next few seconds, you can get your limit orders filled there, or you can know when it may be a good time to exit a trade. Now I'm going to give you one last thing before I end this video, which had a just exclusive focus on thin liquidity levels and empty space. By the way, guys, thin liquidity and empty space are the same thing. I'm just referring to them as the same thing. Empty space just because basically it reminds me of space, because it's black and dark and kind of empty. And thin liquidity, more correct term, is basically just levels that aren't that liquid, like here and like here. What do you think price is going to do, guys? Not based on large bids or large offers or cancellations or placements, but based on which way it would be easier for price to move. Is price going to go up first or down first? Is it going to crash through the best offer first, or is it going to crash through the best bid? Who's going to win this fight? Who's going to win this fight? I see empty space on both sides, but I do see one side a little bit stronger than the other side. Try to predict that side before this price move occurs. Hopefully price doesn't just like stall for the next 20 minutes. I just sit here just staring at the camera waiting for price to go up or down. I have done that before. Looks like we have some equilibrium right now between the best bid and best offer, with neither side really winning out. But now that answers the question. And I did see that too. Let me show that. We had strong bidding depth here. We have empty space here and empty space here, but we just see more bidding depth around here and just not many offers. Additionally, we just had some more empty space to the upside cleared. These offers were canceled, making this all empty. And just as I say it's all empty, price cuts right through it. And if I see bids continue to be placed here, then I'm going to be confident the price continues going up. But price just went up, and I don't see many bids placed. This is a bit of a warning sign for the uptrend here, and I think price will fall. Let's see if it does. And price does fall. Just like that, cuts through the empty space. That's going to be it for this video, guys. I hope you learned something about thin liquidity, thin order book levels, and how that influences price. If you want to learn more, you can private message me. Price will probably continue to fall here. You can either private message me or you can get my Master of the Books where I teach a little bit more of this. With that, happy trading, and I'll see you guys soon.